Good morning,
Good
everybody.
morning.
We'll just wait a couple of minutes, giving people an opportunity to dial in. Okay, I think we'll kick it off. Hello, good morning, and good afternoon, wherever you find yourself. It's 10 a.m. Eastern Standard Time. I'm based in Toronto, Canada. My name is Alan Friedman. I'm the chairman of Koryx Copper. With me on the presentation today is Chief Operating Officer of Koryx, and Julia Beck is also with us. She's the Head of Investor Relations. Yesterday, Koryx Copper announced the updated preliminary economic assessment for its Heye Copper project in southern Namibia. We are very proud to be able to present those results to you today. It is the press release. The full report will be posted or filed within the next 30 to 45 days. This presentation will be 20-25 minutes, and then we'll kick over to Q&A. On your Zoom screen, right at the bottom, there will be an option for questions. If you don't mind posting your questions there, we will get to those questions at the end of the presentation. But for now, I'd like to introduce you to Heye Daun, CEO, who will kick off the presentation. Thank you very much.
Great. Thank you, Alan. And welcome to everybody on the call. I appreciate that we have so many attendees. I have to say sorry to the South Africans and Namibians, and I know there are a lot of people in the room because of this Friday afternoon slot. We were rushed to get it out because we've got a series of conferences coming up next week. We should have had this webinar yesterday, would have been better, but we'll get it over and done with in a reasonably quick time. But I appreciate you all being here and listening in. As Alan said, I think I'm going to be doing, at the end of the presentation, I will then read off the questions and I'll direct the questions to either Trevor or Alan or myself. And yeah, so with that, let me just do this presentation. So for those of you who don't know us or don't know me, my name is Heye Daun. I'm a Namibian mining engineer. I'm the president and CEO of Koryx Copper. Alan and I took over leadership of this company last year. We got involved, refinanced it. We were not the founders of this company, so that's different, but we gave it new vision, new drive, new money, and we're taking it to the next level. Heye is an exceptional it's a very good project. We will make it exceptional, and we're going to show you in this presentation what the PEA is putting on paper. Just some Canadian regulatory stuff. Obviously, we'll be making, or we might be making, some forward-looking statements, so just enjoy that with caution. Okay, so Alan and I have had quite a good track record in Namibia, especially with creating companies, advancing them, financing them, taking them forward, and that's a very important part of the story, because we are doing what we do best, which is identification, acquisition, and advancement, and basically repeating our past success. We are very conscious of our core competence, which is exactly that. But we're not in this on our own. We've got a very credible and well-proven leadership team and management technical team that's with us and who's been with us for a very long time. We've added more people. Trevor is a new addition. He comes with his own unique skill set, especially in the copper mining, copper production, and sort of mine building space. But all in all, we're very confident of what we are doing, and we've demonstrated in the past that we know what we are doing. So the management team is, as presented over here. We have roughly 60 people working for us in total at the moment, some geologists, quite a lot of some engineers, and we work with some world-class technical specialists who we have worked with in the past. Mainly based in Namibia, some based in South Africa, some international. The lead is DRA Global. They're a very well-known engineering group out of South Africa who've done a lot of work in the copper space, but also Knight Piesalt, who are doing most of our infrastructure work in Namibia. Some excellent people who are being directed by our own in-house technical team under the leadership of Trevor and Steve Burks and Charles Creasy. So just very briefly on the company. So we are roughly 100 million Canadian dollar market cap company listed in Canada. There was a press release today that I just want to put into context. We are re-domiciling the company to Luxembourg. It doesn't affect you as an investor at all. It's just to set ourselves up better, to give us more flexibility to deal with potentially Chinese or Asian investment, etc. We are well financed. We recently concluded a $25 million financing with a lot of support from Namibian and South African investors. Got about $30 million in the bank. So we've got the money to do what we're setting out to do here. We've got very strong shareholders. By now, Ross Beatty, Tech Resources, various institutions. I am personally a significant shareholder, and I've got some arm's length family offices that invest with me. And together, we actually represent the biggest group of shareholders here already. And we will continue to buy in the market, and you will see that. So I've personally invested a very significant amount of money into this company, and I will continue to do that because I have great conviction that we are onto something big over here. Being in Namibia is exceptional, and Namibia sells itself. It's, of course, a very safe country, a very organized country, a country with a very active mining industry, and with a very mining supportive population and government. There's major growth in mining happening in Namibia right now, especially in the uranium space, where a couple of additional projects are at advanced stage of development construction. And so it's got a very well-established mining infrastructure, and also very well-established power and water infrastructure, which allows us to have relatively low costs, and I'll get to that in developing the Heye project. So Namibia really a superb jurisdiction to be doing this in. For those of you who don't know Heye, maybe just a very quick recap. So we took over the Heye project, as I said, about a year ago. It has a very strong pedigree, having formerly been owned by Rio Tinto and Teck, who did some very good work in the 1970s and 1980s, however, in a much lower copper price environment, and that's why the project at that time did not get the go-ahead. It then ended up in the hands of various companies who were largely underfunded and maybe didn't have the same level of leadership or drive or conviction that we have. And also it was a different copper price environment. Of course, in the last few years, copper prices having moved up, that's changed everything. So the Heye project itself is at the PEA stage at the moment. It's simple, it's scalable, it's a big project. I would call it a world-class project, but that's a loose term. Maybe it's certainly a world-class project. It's right up there. And it's quite advanced with a low level of risk because it has no fatal flaws on the social, environmental, or technical side. And it's located just on the Namibian side of the South African border. Since the end of 2024, it's under credible new leadership, under Alan, Trevor, myself, and our technical team. And our stated aim is to optimize and right-size this project, de-risk it, and take it forward. I think a unique aspect of this opportunity is also its very low valuation. Because of its somewhat checkered history, the project is not very well known, and as a result, it is not that well known in the Canadian capital markets, and it hasn't really re-rated yet. So from an investment perspective, the low valuation represents downside protection and significant upside on re-rating, which typically happens with technical execution, which is our specialty. So here are the summary metrics for the PEA, which we announced yesterday. So the PEA, for those of you who don't know, it's a preliminary economic assessment. It's like a scoping study. We do things properly. So a lot of the work is at way beyond scoping stage. I would say a lot of the work that we've done is already at pre-PFS stage. So we've got high conviction in what we've done. And the idea here was to reposition and rebase this project, because there is an existing PEA out which utilized an alternative processing route, biological or bacterial leaching, which is not credible at scale. And so we decided to put out this PEA, even though it is not yet our best shot. And that's because it's still based on an historical 1-year-old mineral resource. So none of the successful drilling that we've done over the last 9 months or last year is included. And none of the resource upside that we've identified that we're going to capture through this intensive drill program is reflected in the mineral resource that underlies this PEA. But nevertheless, the numbers are very robust and demonstrate that HYPE can be a technically and economically feasible operation. So we've got an NPV of roughly just under $1.4 billion US dollars. IRR 20% on the low side will improve. Development capital, we've put a number to it finally. That's of course always the big uncertainty. What will it cost to build a big copper mine like this? We're looking at about just over $1.5 billion US dollars. So this is a big project in the Namibian context. It's the biggest project I've ever undertaken. It's much bigger than our company, and of course in the future we're going to have to introduce strategic partnerships, etc., to see this project through. But it does have credible numbers. It's got a relatively quick payback. It's got a long life of mine. There's significant upside to that life of mine, I believe, with the inclusion of additional low-grade resources, which we've identified. That life of mine will grow substantially, probably to 30 years. And we have almost achieved the sort of low water mark or the credibility threshold of 100,000 tons of equivalent copper production per year. That's a number where a Rio Tinto or a BHP or a large cap company will take an interest in you. And it's also the number that's appropriate to the size of the mineral resource. So currently sitting at 92,000 tons of equivalent copper production per year, which is a very substantial copper mine. The unit costs, which is a key metric, are in the middle of the pack, in the middle of the cost curve. So despite the relatively low grade that this project has, we have very healthy margins and also very competitive capital intensity relative to other similar projects in the world. So therefore, very robust numbers with substantial upside still to be delivered with the next study that we want to publish in about a year's time. I have some detail on capital costs. I'm not going to read through this. There's obviously also, there's always questions around the legitimacy of these numbers. Because as you know, a lot of these junior companies, some do credible work, not all do. There are a lot of cowboys in this business. We are not cowboys. And we are serious players and we deliver honest studies. But we have to demonstrate legitimacy of these numbers, and especially on the capital estimate, there are always question marks. So we're quite confident that this is a good estimate, but of course it's going to get fine-tuned as we progress this project. So just to get to the asset overview. So this is a porphyry project. For those of you who are not geologists, a porphyry is typically large scale, generally lower grade, highly disseminated, big projects, typically similar to the Andean Copper Belt or in North America and the Rockies. You have to compare us to those kind of projects. This is very different to the Zambian Copper Belt. The Zambian Copper Belt is sedimentary, generally higher grade, very, very different in that regard. So this is one of the oldest porphyries in the world. It's about 2 billion years old. The implication of that is it has had multiple phases of deformation since, geological deformation, which has given this project some strong structural elements to it. In layman's terms, that means that's an opportunity. It means that there has been certain areas of the deposit represent higher grade, and some of our recent drilling has demonstrated that we've got an ability to target these higher grades, which will enable us to improve the grades of this deposit as we drill it out over the next 6 to 12 months. The project is located right down south in Namibia on the Orange River. It's been known about for a long time. As I said, it's got a long, well-established pedigree, and we've recently taken it over to give it new life, new vision, new leadership, new drive, take it forward. So zooming in a little bit. So as I said, it's located just to the north of the Orange River in some very rugged terrain on it's on state and communal land. We have no communities there. We have no environmental issues. We are blessed with an excellent infrastructure backdrop. We have a major grid power line running past the project close by that needs to be upgraded. That's all in the capital estimate. We have water from the Orange River. The water supply strategy is in the process of being fine-tuned further. There's an opportunity potentially to pipe water to this project from a Namibian dam called the Neckartal Dam, but it's early days. We're doing those studies and it's going to get incorporated into future technical studies. But our engineering work is far progressed in terms of laying out the scope of this project. It's going to be 100% open pit, which is simple and easy and low risk, with waste dumps, tailings facilities, water storage dams, camps, renewable solar project, etc., all built into this project and in the process of being evaluated in ever more detail by the group of engineers working for us. This is what it looks like to give you an idea. There's the open pit. This is looking towards the north, towards the west, roughly. There you can see the processing plant. It consists of 2 trains, 2 crushers, 2 big trains, for a total of about 28 million tons per year. For the engineers amongst you, that's about 75,000 tons per day. It's a big processing plant. It's a much bigger mine than Otjikoto or Asino, which are the 2 gold projects that I was involved in before. It's probably about 3 times the size of those. So it's a major project for Namibia, and it's a major opportunity, not just for shareholders, but also for Namibians for socioeconomic upliftment. Its location is very favorable, as I said, and we continue to develop this site layout further. It's a big open pit. We've had some very interesting drill results recently. Generally, some very long intercepts up to almost 1 kilometer deep. That suggests significant upside. We've also had some very nice high-grade intercepts. That one in particular, drill hole HM90, which we published a couple of days ago. And as I said, this mineral resource estimate has very substantial upside. And a lot of these results that you see here are not included in this PEA yet. So in terms of the upside, of course, the next study must include all of the drilling that was completed since October last year. And that gives us the ability to significantly improve our geological and structural modeling, to also bring in byproducts, in particular moly and a bit of gold, to focus on the higher grade domains that we've identified and have started drilling, to constrain this deposit more. All of these things in layman's terms have the potential to improve the grade of this deposit. And if you look at the economic studies and at the scenario analysis, a small improvement in grade has an outsized impact on the financial returns of this project. And then, of course, the project also has potential for a very large low-grade tail that could be processed either through heap leaching, which is in the current PEA, or potentially through a bigger plant, which is a trade-off, through a bigger conventional milling and flotation plant, which is a trade-off study that we will undertake going forward. So this is just a drill plan to give you a sense. I mean, you can see the red holes is the historical drilling. The green holes is what we still have to do in the next 6 to 9 months. And the black holes is what we've already completed. So much more drilling, and really in the drilling is where the opportunity for a further step change in economics for this project lies. This is what it looks like. A lot of you, or some of you, would have been there. It's very rugged, very dry, very unpopulated, and actually a superb location for a project. The only real challenge is drilling it, because we've got to get the drill rigs onto these peaks. And so our drilling rate, unfortunately, is quite slow. And that's why we've ramped up to 10 drill rigs at the end of this month and drilling as fast as we can. So in terms of the processing layout, Trevor, who's the expert on this, can get into a bit more detail later. But it has been essential for us to move away from the misunderstood or not well understood bacterial leaching that this project had historically, and to go back to a well understood, low risk, conventional milling and flotation flow sheet. And we've done that. So that's really what this PEA does. It puts that on the deck, well understood, low risk process that can deal with this deposit at a large scale. We do at the moment still have an add-on heap leach component to this project. It's about 12% of life of mine production is through heap leaching. Heap leaching is cheaper, simpler, lower capital, but much higher risk because it hasn't been demonstrated at scale. And that's why going forward, we will continue to do the test work because it's an opportunity. But it's at the moment uncertain whether heap leach will form part of the next stage technical study. that's under evaluation at the moment. All right, and so our technical strategy in summary is right sizing and optimizing. I think we've largely done that. We've always known that we've got a big mineral resource which deserves a big processing plant. We've done that. The last step, the optimizing, which is introducing the improved mineral resource, that has not been done yet, and that's coming with the next study in about a year's time. And then, of course, also in the next year or year and a half is further de-risking and permitting. We've just applied for our mining license application. You would have seen that in the press release. That's probably a 1 to 1.5 year process to get that approved. And then environmental permitting is ongoing. And then, of course, the third very important step is to deliver additional upside through the improved mineral resource, but also through improved metallurgical processing options. In particular, just to mention one, ore sorting, for example. It's something that's becoming more and more part of modern mines being built. It is, and we're doing the test work. We have encouraging initial results that indicate that we might achieve a significant cost reduction and a throughput improvement in addition to a grade improvement. So many things to look forward to as we finalize and quantify the results of that test work. And again, working with best-in-class technical specialists who are helping us achieve this. All right, so in terms of timeline, we've just delivered the PEA, first new credible technical study. We're in the middle of the study phase. Like any other mining project, it goes through phases from exploration to study to feasibility financing and then implementation. The next step is an updated technical study from the middle of next year. Lots of drilling in between, permitting, I mentioned that. And so hopefully in the second, not hopefully, definitely in the second half of next year, we will have an updated, enhanced technical study. And then in 2027, moving towards definitive studies, FEED, early stage, early works, implementation, project financing. But that's in the future. So for now, the focus is to build on the base that the PEA has established, make it bigger, make it better, and deliver that in an updated study from a year from now. All right, so I've got a couple of more slides on benchmarking with peer group and on valuation, and then I'm coming to the end. So of course, you know, benchmarking with a peer group is very important. We've identified 19 comparable projects. Comparable is these are mostly porphyries with similar mineralogy, mostly sulfide, similar processing route, etc. Most of these are in South America or North America. And you can see we're not the best. We're not the biggest either, but we can definitely run with the big dogs. So we've got a very credible mineral resource side. There's upside to it. We've got a credible grade, and we've got a decent size, not quite tier 1, but we've got an opportunity to improve on that with the drilling and the mineral resource estimate upgrade that we expect in a year's time. I think the biggest legacy issue that this project always had has been its relatively low grade. It was always understood to be a 0.3% copper project. It is now 0.35%, and we hope to improve that further, hopefully to about 0.4% copper with the next mineral resource update, although that's obviously speculative, we don't know. But there are many credible mines out there in the world that operate at these grades. So this is moderate grade in today's terms. So just to give you some very well-known mines out there that you can sort of benchmark this against. Bingham Canyon, I mean, that's known as the biggest hole in the ground in the world. That's a Rio Tinto project, produces about 120,000 tons of copper per year at the moment. Our study is going to be about 90,000. So just give you a sense that in terms of the scope of this project, we really are there with the big boys. And in terms of the grade, more importantly, the grade as reflected as operating costs, we are profitable, we've got sufficient margins, and this project can fly. So this is capital intensity. That's another key question. Yes, $1.5 billion in the Namibian context is a big number. In the international context, for this size of project, it's not a big number. If you ask BHP or First Quantum or Rio Tinto what it costs them to build copper mines like this, it will probably cost them on a unit basis 50% more. Why are we so much lower? Well, it's the Namibian advantage, Namibian location, ideal location, proximity to grid power, water, etc., etc. That's a major factor. But we, of course, have to continue to do technical work to make sure that these numbers are legitimate and real and can be relied upon. Also pointing out on this slide, the diagonally hashed projects, which a lot of the sort of informed listeners on this call will know some of these projects. These are old technical studies, more than 3 years old, and capital cost inflation over the last 3 years has been quite high, probably plus 10% per annum. So you can imagine this entire capital intensity curve would have shifted to the right in the last 3 years. So I think that's one of the key benefits that we have with the Namibia factor. We've got a low capital intensity relative to our peer group. In terms of operating costs as expressed in all-in sustaining costs, we're in the middle of the pack. That's largely a function of grade. We have relatively low grade, but I'm very pleased that we are in the middle of the pack, which tells you that this project, despite its grade, has the margins, can fly, will be technically and economically feasible. And that was really the key objective that we set ourselves to achieve with the publication of this PEA. So with improved grade and lower costs, I expect our operating costs to move to the left, which is all part of making this project better as we go forward. So this is the Wood Mackenzie International Copper Producer Cost Curve, and you can see we're in the middle of the pack there. It's obviously not quite comparing apples with apples because ours is a 10-year estimate, whereas theirs is probably it's an annual snapshot. But nevertheless, we're just painting a picture here that HYPE is competitive in the global cost curve. In terms of valuation, I'm coming to the end. So the valuation is, of course, a key element of Koryx as an investment opportunity. Because of the credibility issues of the past and because of various other issues, this company is not well known. And we, of course, working on changing that. And as we execute and as we get the story out there and unpack this, generally speaking, our valuation should improve. And that's really where the opportunity lies for you as an investor. So how do you value a project like this? I think there are 3 key metrics that people use for an earlier stage project. One of them is on a multiple relative to the copper in the ground. Another one is on a multiple relative to the future earnings potential expressed by EBITDA. And the third one is relative to the NPV, the financial value, the discounted cash flows of this project. And on all 3 metrics, we look very good. So starting with the first one on an EV per resource in the ground, we're at the bottom of the pack. And again, we've got a big resource and a low valuation. And of course, as we improve the valuation of this project, you would expect that we would re-rate, and that's really where the share price opportunity lies. The second metric is on an EV EBITDA basis. A lot of people are less familiar with those metrics because it generally applies more to producing assets. But on that metric, we are grossly undervalued too. And on the third one, which is my favorite metric, that's price per NAV. For those of you who don't know this, basically it's taking our current market cap of $100 million and dividing it by the net present value of the project. That's how you get to 0.08. And generally speaking, this metric is used for most development stage mines, not just copper mines, gold mines too. You will find that most producers trade more or less at a factor of 1 times their NPV. Most development companies trade between 0.2 to 0.4 times NPV. And we trade significantly below that. So I think as we continue to execute, we should move up this curve. And of course, as the feasibility of the project improves and as we de-risk it, and as corporate opportunities, maybe M&A, whatever comes in, you can quite easily imagine a project like ours with high quality, no fatal flaws, to eventually transact at a ratio of maybe between 0.3 and 0.6 times NAV, which shows you the share price traction that could be expected from this project in the next 2 or 3 years. All right, second last slide. Responsible mining is really core business for us. It's very important to build social license to operate in Namibia or anywhere you operate, and we are trying to be as proactive as we can be in this regard. Socioeconomic upliftment opportunity from this project in a country like Namibia is massive. We're very conscious of that, and that's why we're very conscious of doing the right thing. We have an established plan to get there. Which brings me to the end of the presentation. So hitting you over the head a little bit with our key sort of 5 or 6 sales pitch aspects. The first one is we've got a credible management team and well-proven leadership team taking this project and this company forward with a long track record in Namibia of doing what we're doing. We have a quality very robust asset that is technically and economically feasible, as we've just demonstrated with this PEA, and has significant opportunity to improve further. We're in an excellent, first-class, world-class jurisdiction with Namibia. It's my home country. I'm a Namibian citizen. I know how to operate there. I've operated here for 15 years. It's stable. It's mining friendly. It's got excellent infrastructure. It really is the best place to be anywhere in the world, if you ask me. We got very strong financial backing led by Ross Beatty. Myself, actually, I mean, I have to laugh and smile because I don't see myself like that. But having made some money with transactions in the past, especially Osino, I've stuck a few $1 million into this company already, and I continue to invest in this company going forward, and you'll see me in the market very shortly. But I'm obviously only one of many. And then there's the growth potential that will come with improvement of the mineral resource, right sizing, optimizing, and so forth, and the low valuation, which protects your downside, gives you the upside we're talking about. So that's it. Let me end there. Julia, over to you. I'm going to leave the share on, and I guess, sorry, I'm just navigating the Zoom screen here to get to the questions.
I could read them for you if that will help. Heye?
Okay, now I've got it. I've got
Oh,
it.
you got it. Okay.
All right, so we've got the first question. First question here is, why have we not included the latest drill result in this PEA? Will we reissue the PEA with the latest drill results? Yeah, this is a very, very pertinent question. So we grappled with this for a long time. We started drilling a year ago, and we made a decision then that this project needed to be drilled out. The entire project needed to be drilled out again to a tighter drill density in order to capture the upside that I've described. That drilling takes time. And by the middle of this year, which is not long ago, we had not completed all of that drilling. However, we completed a PEA which was necessary for the initiation of our mining license application process. And when we looked at that PEA and we looked at the results of that study, and we realized the technical robustness of the project, etc., we made a decision and said, let's publish this PEA, even though it's not our best shot. It's not what companies normally do. Normally, you publish a PEA when you give it your best shot. But taking into account, or given the sort of historical credibility issues that this project had, we felt it was important to rebase and reposition this project with a new processing route and new updated numbers. And that's why we published it. So to the second part of your question, are we going to reissue the PEA? Yes, we will, but reissue sounds like in the next couple of months. No, we've got at least another 6 to 9 months of additional drilling to do. As I said, unfortunately, we can't force the drilling. It's very slow. We've got these man-portable rigs, 8 to 10. We've just got to get through the drilling, and that's why the next upgraded technical study that will include the upgraded mineral resource will be out probably around the middle of next year. Could be delayed a bit. It depends on the drilling. It might be a little bit earlier, but I think bank on roughly the middle of next year, give or take, plus or minus 2 or 3 months. Okay, so that is the question on the on why the PEA without the updated drill results. Okay, then there's a question on the metal price assumptions. We use $4.30 per pound. That was the advice that we got from the bankers, that it was the sort of street long-term consensus. So that's the price that we used for the study for copper prices. Next study. What are the early indications of Asian interest? What are the chances of a strategic investor in the coming years? Okay, let me give a generic answer. Ever since we got in charge and we started making noises about new leadership and new drive and a new plan, we've had quite significant interest from a range of players, starting with the off-takers, the Glencores, the Mitsuis, the Sumitomos. A lot of these companies have reached out. Yes, we've also had interest from corporate players that have reached out, that have realized that there's new activity with this project. And generally speaking, we're open. We talk to everybody, but we're not going to do anything with anyone anytime soon. Our strategy right now is to answer all questions, de-risk this project, get rid of legacy, and make sure that this project is completely unencumbered. And that's why we are not going to do any offtake, any deals like that anytime soon. We don't need the money right now. We've got the equity capital. We've got enough equity capital to do the studies and the drilling that we need to do. But to the question around what's the chances of a strategic investor? Yes, of course. I think a project like this needs a strategic investor. But I think the right time to entertain that sort of discussion is after the PFS, when we've truly put the appropriate value for this project on the table. So the interest is there. We'll get there probably from about a year from now. All right, let me just go through the other questions. What is the all-in sustaining cost assumption for the financing? This is unfinanced. So in the all-in sustaining cost by definition is mining, processing, selling costs, overheads, plus sustaining capital. So that's in the all-in sustaining costs. And obviously it's a project NPV, so we haven't assumed anything for financing. But I'll give a generic answer on that. You know, it's $1.5 billion of capex. It could grow. I think it's going to be financed with a blend of equity, alternatives, private equity, streaming of byproducts, debt. It's going to be a combination, and they're very likely will be a major strategic investor in this at some stage. But at this stage, it's too early for this. I think in my experience, and we saw this with the Orsino project when we did this last time around, financiers want to see feasibility level studies. So from a pre-feas, usually they want to see a definitive. But if you do a high quality pre-feasibility, at that point we will appoint debt advisors, specialist financial advisors, and we will then we will go down these routes. At the moment, we're just having general discussions, nothing specific. But the right time to entertain these discussions is probably from about one year from now. Trevor, there's a general question here on the process layout, heap leach versus milling and flotation. Maybe you could just discuss that a little bit more with the opportunities with regard to ore sorting, CPF, and potentially the dropping of the heap leach later. So over to you, Trevor.
Thanks, yeah, so we've opted for the lowest risk and the simplest solution, which is of course, and the proven solution, which is of course a crushing, milling, and flotation process. That's been well proven. You can go to any of the copper porphyries been mined in South America, and that's what you'll see. So we've really based it on that. Of course, over the years, there have been some advancements in the technology, most notably things like the pre-concentration. So that could be in the form of ore sorting. There's particle ore sorting, there's bulk ore sorting, and we're doing extensive test work. So we're running 4 test work programs on pre-concentration technologies, kind of ore sorting technologies. And we are also running test work on what is now known as the coarse particle flotation. So this is a technology that Anglo American has really pioneered and has in fact implemented on some of their South American operations. So we think that there haven't been that many new copper mines built in the world, but our project should benefit from these technologies that have been developed by these other companies. We haven't thrown away the idea of the heap leaching. We are testing 5 possible technologies for the heap leaching. These are proven technologies that some of the major mining companies in the world have adopted, and basically we are testing those through credible international organizations that have a track record of implementing these at pilot scale and now on a smaller industrial scale. So, one day, there will be a 5 or 10 million ton per annum heap leach operation going, and we're really riding on the wave of that incredible amount of research here that's been done by the major mining companies. So we're not the pioneers in this, we're just following on the coattails of those great organizations that are doing this incredible work.
Trevor, I'm going to combine 2 questions here. It's on trucking logistics. Lüderitz versus Walfish Bay. There's a question, is that cheaper than a combination of truck and rail? Also, do you have ballpark figures on OPEX per pound related to this? And then also a related question on what was the key assumption for transport location for copper concentrate? Is it all overseas, or is there potential for local as well? Back to you, Trevor.
Yeah, so let's deal with the second one first. I guess there's always an opportunity for local beneficiation, but it needs to be on commercial terms. So we've seen that The concentrate or the smelting terms that have been offered by the Asian smelters are incredibly generous these days. They're talking about negative TCs and RCs, so that relates to treatment charges and refining charges. Interestingly, our PEA does not include the current trend. We've assumed that there will be people will actually be charged for this in the future, but right now, that market is trading in the minus 30 cents to minus 60 kind of a range. So we anticipate exporting our concentrates because at the moment there is no operational smelter in Namibia. If someone is to come and establish a smelter in Namibia, then we would engage with that organization for terms. It's also important to point out that through the heap leaching operation here, 12% of our production will be fully refined. So that'll be 99.99% copper. So that'll be cathode. So we will do in-country beneficiation to final product to 99.99%. And we will do in-country beneficiation from 0.3% to over 20%, which is a nearly 100 times uplift so we are doing a lot of beneficiation in country. So that's the second part of that question. Relating to the first part and the logistics, we've looked extensively at the logistics networks, down to the Cape, via South Africa, via Namibia. The Namibian solutions are the cheapest solutions. Lüderitz is 500 kilometers away. Walvis Bay is 1,200 kilometers away. So in the world of trucking, there is enormous opportunity for us to export through Walvis Bay just because it's that kind of a distance, 500 kilometers, and there are initiatives underway in Namibia to asphalt cover the road from Rochpina, which is a well-established and operational mine, to us, and that's something that we're speaking to the government about, and they would do that at their cost, but we could even reduce that distance, the trucking distance, even further from our operations to Lüderitz. So Lüderitz, simply because of its proximity, is the best option for us, but Walvis Bay, from a scale of operation, is there, and going into the PFS here, we will continue to chase down both of those alternatives just to really finalize what's the split. Do we split it up from a risk management perspective? So there's pros and cons to each of Walvis Bay and to Lüderitz.
Hey, conscious of time, lots of questions, but great, thanks for that, Trevor. I'll just race through some of these others. There's a question on what will be the news flow between now and the updated MRE PEA the next year. So obviously ongoing drill results, progress with permitting, progress with basically demonstrating, hopefully, that ore sorting works and quantifying the effects of it, the cost reduction and hopefully throughput improvement effects of ore sorting. So we hopefully we get positive results. Early indications based on modeling only is positive, but it's early days. So the feedback on that, and then ongoing de-risking, water, power, engagement with the government, etc. We'll put out those press releases. So that's the news flow between now and the next study. There's a question on potential disruption to drilling activities due to weather in Zambia. Of course, we haven't mentioned this. We've got Zambian exploration assets. We are exploring there right now. We are spending a significant amount of money in Zambia. There'll be some news flow on that hopefully in the next few weeks. At the moment, it is, the wet season will come on. At some stage, we won't be able to continue there, and there's a lengthy wet season during which you can't explore in Zambia. Here's a quick question, Trevor, just a quick answer on molybdenum. I'll do the first one, you do the second one. Basically, I get this, and a few times people have asked me, why is molybdenum not included? So it is not included in the current MRE because we only have spotty molybdenum coverage across the deposit, because historically it wasn't always assayed for because the bacterial leaching does not extract molybdenum. But now we are assaying multi-element. So all molybdenum and gold will be included in the next technical study. We haven't included it in this PEA because we've only got partial moly and we'd be shooting ourselves in the foot. But in the next study, moly will definitely be included. So Trevor, quick question, one sentence. What is the process route for moly?
So the moly is recovered together with the copper into a bulk concentrate. And we do have areas in our ore body which we know of that are very much high grade molybdenum. And our test work has shown that we recover to the bulk concentrate. We recover 70% of the moly gets recovered there. And then once we've designed in a small little moly plant that we've done some test work on, and we will recover about 80% of that 70% to a final saleable grade concentrate. So we would recover about 56% of moly to saleable grade. That's the quick answer.
Thank you. Okay, so there's a question on how much heap leaching do we have versus conventional. At the moment in this study, it's 12.5% of total copper production is from heap leaching. But as we said, going forward, because heap leaching, in order to get the heap leaching study work up to PFS level of detail, it's a long process because you have these, just the way heap leach met test working works. And so for that reason, for various other reasons, because it's an unproven technology, I personally am quite keen to drop the heap leach going forward, but we need to find an alternative for the low grade processing, and that's why ore sorting and these other options are so important. If we can make that work, then I think there's a chance that we can drop the heap leaching altogether, but it's too early to say. All right, there's a very somebody picked this up, and thank you. We made a mistake because in the presentation we misrepresented the grade slightly, and I'll correct that right now. In the slide where I compared the Heye mineral resource grade of 0.35% with operating copper mines elsewhere, that's a bit of a misrepresentation because 0.35% is the current mineral resource grade. Of course, when you mine it, and in the current PEA, our ROM grade, process grade over the life of mine is 0.305%, which is quite a bit lower. That's for 2 or 3 reasons. Number one, it's because of mining dilution and recovery. It's normal. And number two, because we've dropped the cutoff grade and we've included a lot more low grade material, and that's why the life of mine grade is lower at 0.305%. And in the next study, I expect that we will have a grade profile, initially higher grade, later lower grade, just to maximize the economics. So I hope that answers that question. There was a question, is there a smelter in Namibia that could take the concentrate? Yes, there is a smelter, but it's currently being put on care and maintenance. As a Namibian citizen, I would love our material to go to that smelter. It would just make sense in so many ways. It would be exceptional for the population of Tsumeb where that smelter is. But as Trevor explained, the economics at the moment just don't justify it, because at the moment, if you ship the stuff to China or other places, they treat it for you for free, which the Namibian smelter can't. So, but let's see, these economics will change in the next few years. So we're not excluding any possibility, and we will beneficiate and do what we can in terms of local processing. Okay, question on what % of the next MRE will be in the inferred category? We don't know. We would like it to be all indicated, because then we can do a big PFS. For a PFS, you can only use indicated mineral resources. But the drilling will take a long time because we've identified these extra low grades. So it might take longer than the middle of next year. And I'm concerned because there's time value of money. I don't want to delay the next level technical study too much. And that's why my feeling is it's going to be a blend. There will probably still be 20-30% inferred resources in the next MRE, and we will just leave that out of the PFS. And we will probably hopefully publish a PFS with as much as possible of the resource, but probably not all, because some of it will still be in inferred. All right, next question is a comment from somebody that says that the stripping ratio is very good at 1.8 compared to the peers. And he's suggesting we should highlight this in a future corporate presentation with stripping ratio adjusted copper grade. Good idea. I'll write that down. So we haven't got that. Stripping ratio is very positive for us, and we should promote that more. Trevor, here's a question for you. How much metallurgy has been completed on the byproducts moly and gold? What are the recoveries? Maybe a quick answer.
Okay, so as I mentioned previously, we get 70% recovery of the moly into the bulk concentrate, and then we recover 80% of that to saleable grade. So 56% is the overall recovery of moly to saleable grade. On the gold, we haven't done enough work, so not yet enough work on the gold side.
All right, thank you. So there's a question. I'll take the first one, and then Trevor, you can add to it. The question is, given the recent major spill from the Zambian copper mine into the Kafua River, which is actually going all around social media at the moment, although it happened 6 months ago, How is Koryx planning to avoid a similar issue, especially given potential use of water from the Orange River? So a couple of things. Number one, the designs that we're doing are being done according to the new tailings management safety standard that has been compiled by the industry. That's the first aspect. The second aspect is it's a downstream tailings dam that talks to the lesser impact on the mine for us. And then the third aspect is we are in a very low rainfall environment. What happened in Zambia was a 50 or 100-year rainfall event, which caused spillage of rainwater that got collected on top of the tailings dam. It spilled over the side of the tailings dam. It eroded the tailings dam wall, and that broke the entire tailings dam, and the slurry then washed down the river. That's what happened in Zambia. Trevor, maybe you can explain why that will not happen with us.
Yeah, so hey, we've done modeling on that tailings dam of ours on the design. We've modeled it on a 1 in 10,000 year rainfall event. So that's more than a biblical scale event. In terms of the 1 in 10,000 year event, we do these inundation models, or our engineers do these inundation models, and we show that if there is a failure, if there was to be a failure, due to the nature of our tailings material, it would not flow to the Orange River, which is, it's 12 kilometers away, so it's a very, very long way away. It's not, like that example you gave in Zambia, where the Kafue River runs, right on the front doorstep of that mine that you're talking about. We're a long way away, 12 kilometers away, and without a shadow of doubt that if there was ever to be a spill, it would never get there. And then, as you've spoken about, is our design and the operation of this tailings dam would make sure that we would not have a failure of the dam.
Trevor, just a question from you. You mentioned that earlier on one of the investor calls, that the coarse grind speaks to this as well. Can you just expand on that quickly and explain that again?
Yes, absolutely. So in our process flow sheet, we have the technology which is known as the coarse particle flotation. So that allows us to give this ore quite a coarse grind and create almost a sand, almost like a beach sand textured material. Let's just call it sand building material. And our tailings dam incorporates that very coarse material, and that, as you've pointed out, Heye, will be used to build a dam wall. So we're kind of building a dam wall much like civil engineers would build a dam wall. This isn't a self-raising kind of a tailings dam where you're using the tailings material to build your dam wall. We would physically be building this dam wall, through a process of carting the material there, compacting it. So this is like building a dam wall as you would have in any country. So that's the great thing about this coarse particle flotation, is it gives us this dam building material which you can engineer up. So you can do all the penetration tests, you can do all your compaction tests, what you are building with here.
All right, thanks, Trevor. So there's a question and a comment. Congratulations on reaching this important milestone from an analyst. Thank you very much. We appreciate it. And the question, why not move ahead to PFS instead of doing a PEA again next year? Yes, I hope we will do a PFS. I just don't want to be pinned down on it because I know how slow the drilling is, and we're doing all we can to complete the drilling by the first quarter of next year to be able to put out a pre-feas by the middle of next year. But I need wiggle room because, we've recently identified these high-grade intercepts. They need drilling. We've got drilling requirements coming out of our ears. And I think I don't want to put out a PFS prematurely by the middle of next year if we haven't drilled enough. And that's why I just give myself this wiggle room. But yes, the stated intention is to make the next study a PFS. But there may be a reason why it could be another PEA, but that would be a disappointment for me. So I hope that answers that question. In fact, I would rather delay the PFS by a couple of months and still make it a PFS. So rather have a PFS maybe Q3 next year and incorporate all that extra drilling if we need that time. That's not the base case. The base case, the target at the moment is more or less middle next year PFS. But give us 3-4 months of wiggle room, please. All right. And then there's another question. The project has 3.9-year payback period. Will we return the capital to investors immediately or invest it in other exploration opportunities? Yes, that's an interesting question. of course, cash flow is many years in the future, and so it's difficult for me to say at this point. Right now, we focused on financing or firstly developing this project, getting it to an investment decision, thereafter getting it financed. And the question around what to do with the capital that the project produces once the construction capital has been paid back will be dealt with by future management. Typically speaking, for sure, there should be investment in further exploration. But again, I really can't say whether there will be a high dividend payment policy or not. That's for the future. Yeah, thank you. All right. Anyway, we're coming to the end. If there are any questions, please post them now. We'll give it another minute or two. Alan, did you wanna say anything in closing while we give people to ask another question, or Trevor, anything you wanted to add that I forgot you to ask, anything like that? Over to you, Alan or Trevor.
No, just to generally thank everybody for their support. We've had overwhelming interest on this presentation, as well as over the last few days. We've had 3 significant and consecutive press releases since Wednesday, just after Labor Day. So obviously, firstly, thanking management, Heye and Trevor and the team, who've been working diligently, as you can see, while the rest of North America and Europe have been on holiday. The very significant high-grade drill result, which is testament to what Heye and Trevor have been talking about for the last couple of years, showing that there is higher grade on this project, and that's going to continue to show itself. The PEA, which obviously you can see is really bringing this into world-class status in a conventional development way, which has always been sort of a criticism of this company based on previous PEAs on bio-leach and heap leach and things like that. And today's press release, which I don't think should be sort of dismissed too easily, because ultimately our management team have been known to create value for shareholders. And a lot of that value comes through M&A exit. Doesn't have to, but in our case, most times it has. And what we are in the business of is ensuring optionality for the company to make sure that we get maximum dollars ultimately for shareholders, whether that be through development of the project ourselves, but in many cases through M&A. And in order to ensure the most efficient M&A process, you have to open yourself up to all the buyers out there. Doesn't mean that an Asian investor is going to buy us, or Chinese, which has various limitations in Canada, but it could be. And so opening up that field is a very, very important thing to do. So we're very happy that we are able to announce that we're going to head in that direction. And it's not easy to do that. It's been months and months of a lot of work by our CFOs and our CFO's team. And we've seen some companies do that, and what it does immediately is it sort of creates a bigger buying field of acquirers. So 3 very significant press release, but a lot of work behind that, and it just shows how management is absolutely determined to execute. 2 other smaller issues, but very important. One is an extension of the exploration license covering the Heye project, showing that we have very good relationships with government, and they're backing us. I mean, there's a little bit of history with this company with license issues, but since this management's come on board, exceptional relationships with governments in Namibia, and an extension of that license. And finally, something that we haven't really focused on, and that is the mine license application, which has taken management just over a year to prepare and submit, which is also a great milestone. So execution is definitely the point of sort of positive ability of this management team, and I just wanted to point that out. Finally, we are going to be doing a lot of marketing in the next few weeks. We will be 4 days next week. Trevor and myself will be in Beaver Creek. And so we have a very, very full slate of investors meetings back to back, but we'll always make ourselves available. So please reach out to Julia, myself, or Trevor if you're not on the agenda in the official Meet Max. And other than that, there'll be additional marketing in Toronto the next week. We'll be around, and in Europe later on in October, there will be some more marketing and conferences. So we are available anytime for one-on-ones, or if we're in your town, please connect with us, and we'll be very happy to meet, and want to make sure that everybody has an opportunity to meet management. We're always accessible. And one further thing is that it's not just institutions and the banks and the dealers, but our retail investor group, we're very fortunate to have. And of the $25 million worth of capital that we raised recently, a very significant amount of that were retail supporters, both in Namibia and South Africa, in addition to Europe and Canada. So thank you for everybody's support and being here today.
Great.
Trevor,
Thank you very much, Alan. Thank you to the listeners. Thanks for setting this up, Julia. And have a happy Friday night, everybody, down here in South Africa or Namibia.
thanks, everybody.
Thank you and goodbye.